Assalamu alaikum wa rahmatullahi wa barakatuh. Brothers and sisters, today we'll discuss the financial aspect of financing. In our last chapter, we have discussed the BBA home financing, Musharrakah mutanaqisah home financing, and Ijara vehicle financing. So today we will look at the financial aspect, how the calculation of the profit, and also a very important concept, which is the time value of money. Well, the Islamic financing, even though they are quite different in terms of the contracts and the operation, however, in terms of the calculation, they are sometimes they are similar. Some of the contracts like BBA, however, some of the contract like Musharrakah is quite unique. So let us discuss first the time value of money. Okay. So the time value of money is very important to discuss here from the Islamic perspective. So many of you are familiar with the concept of the time value of money in the conventional finance, where we understand that money the money at the present it owes more than the future, because there is a possibility of that the money can earn interest. So if you have 100 ringgit right now, is better than you if you have 100 ringgit after 1 year, because within this 1 year you can earn interest. So there is a value for the time. So if you yeah, that's and the money at the present, it has more value because it has there's opportunity to gain interest. However, so what the Islam thinks about this, the time value of money, whether is it allowed in the Sharia? So if based on the Sharia, we know that Islam does not allow interest. Riba is prohibited. So in Sharia, um, in time value of money should be prohibited. However, in Islam, it is allowed if we do trading, buying and selling. It is allowed if we sell something on deferred payment and we sell at a higher price. For example, if I have a handphone, and that handphone, if I sell with a cash price, the price will 500. But if I sell it with a deferred payment or the credit sell, where the payment will be paid after 6 months, at that time, if I sell the same handphone at 600 ringgit, it is allowed in the Sharia. Why is it allowed? Because it is a buying and selling, and the seller is allowed to sell at any price he wants, regardless of whether it is a credit sale or it is a cash sale. So, based on that, the Sharia does not consider time value of money in a borrowing or lending relationship because of the prohibition of interest. So, if I borrow money, if I want to return, I have to return the same. Okay, there's no time value of money at the borrowing and lending. Uh, practices. However, in buying and selling, if I want to sell something on credit, it is allowed. I can sell it with a higher price. However, the price should be fixed. It cannot be further increased due to the late payment of the customer. So this is the concept of time value of money in the Sharia. So if we calculate, for example, let's say BBA home financing, okay, so when we want to, let's say the bank wants to sell the house with a profit, so when it will calculate the profit, it can consider the time value of money to set the selling price of the house. Okay, so we see first how is the calculation for BBA home financing. Okay, where the concept of time value of money is used, and the calculation method they call it the CRR, which is means the constant rate of return. So here the time value of money concept is used because home financing is for usually for long time, for a period of 20 years or sometimes 30 years. So in order to get the calculate okay the selling price of a house, okay, under BBA. Okay, first we need to get the annuity factor, okay, that we have learned from the business math. Okay, we need to get the annuity factor in order to get the monthly payment. Okay, so in order to, so this is the formula for the annuity factor, where I is the in periodic profit rate, or we can say the interest rate per period. Means that if in the question, if they say that profit rate 5% per annum, so we have to make it per month. Okay, so usually we have to divide by 12. So I, and then there's a 1 from the formula, plus I again, the interest rate per profit, to the power n is the number of period, or means the number of months usually. Okay, and then again divided by 1 plus I to the power n, okay, the number of month minus 1. So with that we'll get a annuity factor. Usually we'll get some decimal points, so we should take at least 5 or 6 decimal points. I think at least 6 should be better, okay, to get most accurate answer. So once we get the annuity factor, so this annuity factor here, if we multiply with the purchase price, okay, so we'll get the periodic payment, how much the monthly payment that the customer needs to pay. And then if you want to okay, calculate how much the selling price, how much the bank is going to sell the house to the customer, so we need to just after we get the periodic payment per month, we just multiply with the number of months, so we'll get the selling price. And once we get the selling price, okay, if you want to know the profit for the bank, so just deduct from the selling price the purchasing price, so we can get the profit for the bank. So let us see one example. Okay, Ali approaches the Islamic bank and applies for financing under the concept of buy bitaman ajil. So let's say the purchase price for the house is RM 700,000 and the profit rate is 8% per annum. Okay, the period of financing is 20 years and Ali has to repay the selling price in 240 installments. Okay, so first, based on that question, let us see the annuity factor. So here the annuity factor, okay, in order to get the annuity factor, we need to get the I first, okay, the interest rate per period. So the interest rate per annum, it was 8%, okay, or the profit rate, sorry. So that we need to make it per month. So we need to 8 divided by 12 multiplied by 100. So we got 0.006667. So that is the I. Okay, so we need to take as much possible the decimal points. Usually 6 plus is better. Okay, and then the number of month is 20 years. So is 20 years is 240 months installments. So if we put the formula, okay, I bracket 1 plus I to the power n, which is 240, okay, I, which is 0.00667. So we got this figure, okay. So that is the annuity factor. So once we get this annuity factor, so the second step is you want to know the periodic payment, how much the customer needs to pay per month. So we just multiply this annuity factor multiplied by the purchase price. Okay, so in the question we have seen the purchase price for the house was 700,000 and annuity factor we just got from here. Okay, so if we multiply that annuity factor with the purchase price 700,000, we got 5,854.96, which is the periodic payment that the customer has to make. So now if the customer pays 5,854, so what is the total selling price of the house? So we just multiply with the number of months. So the number of months is 240. Okay, so the periodic payment multiplied by the number of the months. So if we multiply, we get the selling price. So this will be the selling price of the house. The bank will sell this house with actually this price 1.4 million. It's like double. Okay, considering the time value of money. So how much is the profit for the bank? So we just deduct the purchasing price, which is 700,000, and this is the selling price. Deduct the purchase price, so it's a double profit. It's 705,190 ringgit. So this is the profit for the bank. So I hope it is clear. So now we'll move to vehicle financing calculations. So for vehicle financing, there are two methods, CRR, constant rate of return, and also Rule 78. However, the Rule 78 is the most popular, and it doesn't actually consider the time value of money, but it has a different method to calculate the profit. So this Rule 78 is a method where the bank will charge higher interest or higher profit at the beginning of the month, where the bank will charge lower interest or profit at the end of the financing period. So this is how to calculate this, okay, based on Rule 78. So usually the method is you need to add up. So let's say if it is a 1 year financing, so you have to add up 1 plus 2 plus 3 plus 4 and so forth. Okay, so why this is called Rule 78? Because if you add up 1 plus 2 plus 3 plus 4 until 12, you get 78. So that's why it's called Rule 78. But it's just for 1 year. But if 2 years, you have to calculate 1 plus 2 until 24. Okay, so okay, it will be more clear if I give you the example. Okay, so here let's say Fatima approaches Al Ihsan Islamic Bank and applies for an ITAP financing for a new Perodua car. She agrees to a financing tenure of 2 years. Okay, just to make easy, the cost of financing the vehicle is 20,000. Let us say the profit rate the bank wants to charge is 5%. Okay, so profit 5%. Uh, the vehicle financing is 20,000, is for 2 years. Okay, so let us calculate the actual. Okay, so first step, okay, under the Rule 78, we need to add up the months. So it is 2 years, so 24 months. So we have to add up 1 plus 2 plus 3 plus 4 until 24. Okay, so if you add up all these, you will get 300. Okay, but I know many of you might feel difficult, so I got a formula for you. So this is the formula. What you need to do is n is the total number of months. So here the number of months is 24. So you put 24 multiplied by again 24 plus 1 divided by 2. Okay, so if you do that, okay, n is the last okay, or the number of months. So here 2 years 24. So 24 multiplied by 24 plus 1 divided by 2. So you also get 300. Okay, 24 multiplied by 25 divided by 2. So you will get 300 as well. Okay, so now after that we get okay, what is the total profit that the bank will charge to the customer? So just this here, the profit calculation is simple. Okay, we take the 5% rate, okay, 5% rate, okay, multiplied by the time, which is 2 years yearly. Okay, and then the cost of financing is 20,000. So profit rate is 5% multiplied by 2 years multiplied by the cost of financing is 2,000. So the total profit the bank will charge on the customer is 2,000. Okay, now so this is the thing is Rule 78, how it works. So now this 2,000 interest or profit rate, bank will not charge every month the similar amount of profit. Rather, at the first month the bank will charge the highest amount, at the second month second highest. Okay, so how it works? So first month the total, okay, the profit is okay 2,000, so multiplied by the last month. So you start with the 24. This is 2 years, so the last digit was 24. So 2000 multiplied by 24 divided by that's magic number, we call it 300. So if we do that, we get 160. And the second month is you have to, everything is same, but you have to multiply here 23. Third month 22. So you come to the opposite direction. So this is the profit rate the customer will pay every month. So you see it start to reduce, means that the customer will pay higher profit at the beginning, and slow gradually the profit rate will reduce. So why the bank does like this? Because the bank wants to penalize the customer who wants to settle earlier. Bank wants to take the profit first, because if the customer settles the loan earlier, then the bank will lose their profit. So with this way, the bank will actually charge higher profit at the beginning, and then it will charge lower profit at the end. So with this, actually the bank is penalizing to customers who want to settle earlier, and bank wants to make sure they have profit from this financing. However, many would criticize this rule 78, because this is something which is not in line with the welfare the bank, and it is a very old kind of calculation that is still in practice, where the financing institutions they consider their profit first. Okay, so now if we move forward, so how will be the amortization table? Okay, so you can see at the first month here, okay, the balance is 2000 is the profit. So the interest or the hmm, okay, or the profit paid is 160 as we calculated, and the principal will be 756. Okay, so actually every month the customer will pay the same amount. Okay, which means if you add up always the interest rate and principal, you will always get the same. However, you can see the interest rate decreasing. Okay, at the first month, like 160, but at the last, the interest on only 6. However, the principal you see at the first month is 756, but and then the second month is higher, and the third month is more higher, and the fourth month. So until at the last month, the highest is 900 and 9. Okay, but if you add up this 909 plus 6, you got 900 and 915 or 916, right? Here also, if you add up 756 with 160, you will get the same number. Means the customer every month actually paying the same, but it is the bank is that is recognizing okay, the profit first, and then okay, the higher amount of profit at the beginning, and then lower amount of profit at the end of the months. Okay, so this is how it the works. So it is how the interest led to pay. So I'm sorry for using the word interest, because I use the conventional. There is no Islamic uh, calculation software, so I use the conventional, so change the interest to profit actually. Okay, so this is how the rule 78 works. So the difference is actually how much the bank will recognize the profit per month. Okay, so from the vehicle financing, we move to Musharrakah mutanaqisah home financing calculation, which is, I would say, the unique calculation for Islamic financing, which and is different from from BBA and also the conventional financing. Okay, because this calculation is based on real profit and loss sharing. Okay, real equity, and also following the ijara rental rate. Okay, so in order to get this Musharaka calculation, there are a few components that you need to know. Also the annual rate of return, because in the question they will tell us the ijara or rental price per month is 2,500, or the house rental per month. So if we get that rental amount, so we have to change that. Based on that rental amount, we have to change it to annual rate of return, so which is like somehow you can similar like interest rate per annum, okay, or the profit rate per annum. So we just need to do it for the sake of calculation. Okay, so if we get the monthly rental, so we need to make it, we need to annualize it, or annual rate of that we call annual rate of return. So in order to get that, we have to get the R, which is the monthly rental multiplied by 100. T is the time. Time is if we want to annualize it, so we just multiply with 12. Okay, because the question will give us monthly, so we want to annualize it, so we just multiply with 12. So here is the T is the time period. Okay, so which is 12. And then the TE is the total equity, means how much is the price of the house, which is here, let's say 500,000, 1 million. So so following this formula, we'll get the annual rate of return. So after we get the annual rate of return, we have to uh, get the monthly periodic capital payment, means that how much the customer needs to pay to buy the share of the bank. Okay, as we have learned in Musharrakah Mutanaqisah in the previous chapter, that in Musharrakah Mutanaqisah, the customer will gradually purchase the share of the bank. So how much the customer needs to buy to purchase the share of the bank, and given a fixed period, let's say 20 or 30 years. So in order to get that, we need to follow this formula. So here we need to get the I. So I, similar like the in BBA. Okay, once we get the annual rate, okay, so that annual rate we have to convert to I. So means that we have to again divide by 12 and then multiply by 100. Okay, so then we'll get the I, same like the in BBA, and then multiply bracket TE is the total equity minus 1 plus okay, formula 1 plus I again, okay, the interest rate, okay, periodic profit rate per annum, and then N is the number of months. So if it is a financing for 20 years, so 240 multiplied by the CE is the customer's equity. You know that in Musharrakah Mutanaqisah, the customer will pay the 10%, or he will have an initial share, maybe 20% or 10%, he will be the owner. So what was his initial equity? Okay, so that also should be multiplied, divided by again 1 plus the I. Okay, and then to the power n is the number of months, okay, minus 1. So this is so with that, this formula will get the monthly periodic capital payment that they call PCP. So this is the most important one. So if we get this, so we need to know the customer's present investment, means that after 1 month or second month, for example, or third month or fifth month, okay, we want to know how much is the customer's ownership in the house, how much is the customers, because the customer every month will pay, okay, to buy the share um, of the bank. So the customers share will increase. So if we want to know at the end of certain month, what is now right now the customers equity, so we need to get the customers equity as of last month. Okay, and for the first month we'll get the customers initial equity. Okay, so customers equity as of last month plus the CSR, which is the customer sharing of the rent. Okay, here is a very important thing here, that every month, let's say the customer pays rent. Okay, let's say 2,000 rent. So when the customer pays that 2,000 rent, in that 2,000, customer also get back some of the rent based on customer share on the equity. For example, the customer has 10% share in that house. So if he pays 2,000 ijara rental, then from that 2,000 rental, 10% will go back to the customer, which is, let's say, 200. So we have to add that. Okay, so customer's initial equity plus customer share in the rental plus the PCP that we learn from that we'll get from this step. Okay, the personal periodic capital payment. So we'll get the customer's present investment. Okay, and then the revenue sharing, if you want to know. Okay, so this maybe should actually come here if we want to do it properly. Okay, revenue sharing means how much the customer will share the ijara. So the customer's equity, okay, or customer's investment as of date. Okay, that will get okay, from this one. Okay, and then multiplied by the rental divided by the total equity. So if the rental, let's say 2000, divided by the total equity, let's say 5000, so you'll get the revenue sharing. So this calculation, you sometimes revenue sharing also, you can use your common sense sometimes, or you can use a percentage sometimes to make it more easier. Okay, but if you follow this formula, that is better. Okay, so let's see an example to be more clear. So let's say Munif wishes to purchase a house priced at 500,000, and he's willing to pay 10% of the price as part of his capital. So he'll pay 10%. His initial capital or investment is 10%. And he is willing to opt for the leasing ijara. Okay, the Islamic bank agrees to fund the 90%, okay, remaining 450,000. And the current prevailing rent for similar house in the locality is 2,500. So this is the monthly rent. So the Munif wants to buy back capital portion of the bank in 20 years. The tenure is 20 years. So the computation of various components is as below. Okay, so let's see. We get the first the annual rate of return. So annual rate of return, we first get the rental, which is 2,500 that we learn. Okay, and then the time period here, as I said, for 12 months is always 12 months. If it is annual, okay, so if it is a monthly pay ijara, okay, so we make it multiply it 12, and the TE total equity, which is 500,000. So if annual rate of return is okay, we get the ijara, okay, 2,500 multiplied by 100 multiplied by time t, which is 12, divided by equity, which is 500,000 here. So we got 6%. So 6% is the annual rate of return. So now the second step is we need to go to the get the PCP, means how much the monthly uh, periodic capital payment the customer has to pay to buy the share of the bank. So in order to get that, we have to first get the I. Okay, so how we get the I? We already have the annual rate of return, which is 6%. So 6% we have to divide by 12 multiplied by 100. So we got the I is 0.005. Okay, maybe some of you can get a different figure. Is okay, but try to get most at least 4. Okay, or 5. I think it would be better if we take more than this. Okay. So if we put this I, which is 0.005 here, multiple total equity is here is 500,000 minus 1 is the formula 1 plus the I again, this 0.005 to the power n, okay, 240 because 20 months, okay. And then the customer's equity, as I said, the customer will, as mentioned in the question, the customer will pay 10%. So which is 50,000. Okay, divided by again formula 1 plus the I, which is 0.005 to the power n, which is 240 minus 1 for formula 1. So we got 723.94. So this is the periodic capital payment that the customer has to pay to buy the share of the bank in 20 years. Okay, so after we get the PCP, okay, let's say the customer's present investment. So at the end of the first month, okay, how much the customer's share increase if the customer already paid the PCP. So we just add up. So customer's initial equity was 50,000 plus when at the first month when the customer paid the rent 2,500, so the 10% of it will come back to the customer because customer has 10% share. So that is 10% of it is 250 plus the PCP that we got last calculation 723. If we add up, so customers equity increase at the end of first month is 50,900, and then you can make it percentage. Okay, like from the total 10%, Okay, previous month it was 10%. So how is now? You can just divide by total 500,000. Okay, divided, you can divide by total equity 500,000. Okay, multiply by 100. So you'll get the percentage. Okay, how many percentage of is the ownership? Is it initially it was 10%? Maybe it will be 10 point something. So here is the table. Okay, where it will show okay, the progress. So this is at month 0. Okay, so 0 month, total equity 500,000, customer 10%, 50,000 customer pay. Bank paid 90%, which is 550. Okay, no rental payment, nothing started. So at the end of first month, so customers, okay, as we based on our calculation, the customers equity increase, okay, 50,974. So customers equity increase 10.195%, and banks one decrease 89.805. Okay, which is now right now 449,026 ringgit. Okay, so this is the annual rental every month, 2005, 2000. It will not change, but the PCP also not change. Okay, 700. But the customer rental share in rent will change because first month 10%. So customer will get back 10%. Second month 10.39%. So customer will get back 10.39%, which is 254. Even the little change, it will keep changing. Third month 259. So this one you can, add up based on your any common sense formula, or you can follow the formula. So at the end 240 months, you see customer will be the 100% owner, paid already 500,000, and the bank got 0 percentage, no interest, and the rental amount 2,500. Okay, the customer all the almost 99 point percent already returned based on the previous month. 2,483 will actually go back to the customer. The bank will get only 16.04 percent of the 16.04 ringgit as a rental at the last month. Okay, so with that, it is how it works. To make sure, I just skip the months, but the bank will do the calculation from 0 until 240 months. So this is how the Musharrakah mutanaqisah works. So this is a very unique calculation for Islamic home financing. Unfortunately, it is not in use by many Islamic banks in Malaysia right now. However, this calculation is really unique, and it can represent the market, the true, I would say the true the soul of Islamic finance, because it reflects the rental rate. However, sometimes it is difficult to decide the rental rate. Okay, but then again, it will be ideal for Islamic finance. So with that, we can conclude. So as a conclusion, we can see that Islamic finance for debt-based financing, still they are following their calculation is actually similar with the conventional home financing. Okay, however, it is Sharia compliant because Islamic banking in BBA, okay, they will fix the akad price. Once the price is fixed, it cannot be changed. And then one important thing is the Tawarruk home financing. They are actually using the same calculation like the BBA. So I would not show you the no need to show a different calculation for Tawarruk. It is the similar. And then the Ijara ITAB is using the Rule 78, also actually similar calculation, same like the conventional. However, the Musharrakah Mutanaqisah has a different calculation than the conventional. So with that, I thank you. Assalamu alaikum wa rahmatullahi wa barakatuh.